Good afternoon and welcome to Options Tender. We have a little bit of update from yesterday, slight change. Instead of such a lower move that we're thinking about, Tesla earnings has changed just a little bit. So I want to go through that with you on the lower time frames. We'll start off on the daily, work our way through SPY, QQQ, IWM, and VIX. Now, we do have, I believe, Meta tonight, Microsoft, Google tomorrow. There's all sorts of things that are going to skew what's happening, or they may enhance the actual moves that I'm going to describe today. So if you're new here, go down to that bottom right-hand corner, hit that Options Tote logo, and subscribe. We do these videos often, so make sure you hit that notification bell, and let's dive into it. So right now we have SPY on the daily time frame trying to defend that 8 EMA. I don't think that's going to be the case. We have the VIX. It just had an alert on that, so the VIX is rising. We had QQQ start off with about 0.7% up because of Tesla's earnings and the mention of NVIDIA chips. And so now NVIDIA is actually going lower. And that's, wherever the NVIDIA goes, the market goes at this point. All right. So just a mixed bag with the mega tech stocks. And so that's what's going to skew things going into these next few days, and then Apple sometime after that. Okay. So now not a whole lot has changed on SPY. I still think this looks incomplete, and that this slow is not done. We had a retracement, but just slightly deeper than we thought, and that's different than the Qs. Qs had a deeper retracement. I still think this point here at 490, 491, testing the 100-day, is going to be the point of decision. It's going to be a very important level. I do think that will probably be the low now, instead of a continued move to the downside, and that's because of Tesla. Things can change if Meta, gets destroyed, Google, and et cetera, et cetera. But as of this point, I think this move might get a slightly lower low, and I think tech is going to get a higher low. I think the low is in tech. So that's where we get this divergence that's slightly positive. Let's go down to the 65 and really get that. This might not be as long of it. Well, let me stay. I know we're getting a lot of new people on here, so I just want to show you whether you're a bull or a bear. I think we're looking to get back into this consolidation zone, somewhere towards the top, or I think more towards the bottom. Our projected, and if you want more comprehensive details, I think yesterday was a lot more detailed, but I think our move here, bounce, not this particular area. This isn't a projection of where. This is just somewhat of how it's going to look like. So I know yesterday I talked about this being a very important level. If price goes straight down to that point, then this is as far as I think it comes. If we get our bounce at the 100 like I'm thinking now, I think it's going to look somewhat more like a little bit higher. And however deep the retracements we'll see on the 65, and I think I'll look a little bit more like this, and then not in a straight line, you guys. This is just what I think. 1, 2, we'll probably get a nice 3, 4, 5 lower, and then another retracement. We'll look at that when we get there. And remember, if our alternate situation occurs, the target is way up here at 560, the 560 zone. Our alternate situation, this is a expanding ending diagonal. This is our ending diagonal. If you're bullish and we get down to the levels of whether you're bull or bear, we're correcting. We have a 1, 2, 3, 4, and then we go up to those levels that I was talking about at the 160. All right, not spending too much time on that. The 65 is where the developments are happening. So let's do the traditional technical analysis and work on this chart. Came down to these levels, bow and arrow, support and resistance, because there's a volume node there. The next spot down would be this beautiful resistance, support, support. And that's where I think price, if we make a slight new low, is going to go. Okay. And that just so happens, I think this is the more appropriate channel. If we count this as a 1, 2, 3, and then a wave 4, and then a 5, I think this is going to be the more appropriate channel to look at, where the top of wave, you have a 1, 2. So the top of 2 to the top of 4, bottom of 3, and then that could give us a good projection of where 5 might be. And it might continue lower as time goes. You know, if it's very sharp, it's clearly going to be higher, about 490. But if it takes some time into maybe next week or so, it could be as low as the 486. But my target is about the 491 area. I left this channel from yesterday. It has those two tops here and this bottom here. So just in case, this may be really important. If price consolidates and breaks above this channel that we have drawn and goes directly up to these points because of earnings, then what I'm talking about is going to be a real alternative. If we get up to these retracement points, you know, sooner than later, then that changes everything. That means that this wave is done. We've moved on to the retracement and we go lower from there. So if this just keeps consolidating, gets above, makes a new high, then I think that might be the case. And I'll show you a little bit more precise on how we're going to look at it on this next board. So looking at our Elliott wave picture right now, let's go dig in deep here. Right now we have this as a 1, 2, wave 3, and you know, honestly, you guys, I can count this a different way, but 3, 4 fits with that channel, how things go, and that we're looking for a wave 5. Now, why do I have an ABC here? Because if this is I think the weakness of SPY is going to test the lows. And so if it exceeds the low, yes, this can be an A expanded flat, where the B goes lower than, you know, this initial move, and then we get an expansion move to the upside. But for argument's sake, that's not going to matter. Okay, how we count this, whether you count this as a 5 down here, if we get down to these levels, it could be down here. It could be a simple retracement higher. There's no telling. It's just going to be this big zone. But I think SPY's looking at this point with the information that we have, looks like it's probably going to go lower. So we're going to count it as a 5 and a 1 down here. So we have this, and the reason why I can still call this a 4, and you'll see on the Qs that we're not going to do so, that we have to change that. It's because we're still right in that zone. Yeah, we have a throw over, but we're right at that 382 retracement. So when you have the top of wave 2, which is the top of wave 3 here, down to the bottom of wave 3, this entire move, it's very typical for a wave 4 to retrace about 40%. That's a 382 Fibonacci retracement. We've gotten to the point, gapped up just a little bit higher, and broke back down from there. So that's very typical. It makes sense for this to be wave 4. And so now we're going to get rid of this, clean up our chart, and down to wave 5. Now, no matter what, if you like SPY and QQQ to be the same, then you'd put your 5 or 1 here. It's not going to change anything. This looks like a 5-wave move. I get it. So yes, you could get a higher low and a zigzag. But on the ES we showed yesterday how it looks a lot more corrective. And there's an A, B, and C in there. That's different than the Qs. So what we're going to do, we're not counting this as an expansive flat. Expanding flat. We're going to count this as if and when we get down to these levels. And I'll show you how I got this 618 extension here. We're looking at about that 490 area. Very similar to the traditional technical analysis that I was talking about around the 490. So it's a zone, you guys. It's all a zone. Always is. Always will be. So, and then after that, after we get a low here in the Qs, we're going to take a look at that. So make sure you stick around. I think is going to get a higher low. And that could flip-flop depending on earnings, okay? So we'll do another video tomorrow after earnings. And if we get a new low here, that will be wave 5. And then we get our A, some sort of B, probably really, really shallow. And then a C all the way up here. Now, the reason why I say that, first of all, because it's a zigzag into a wave 1, into a wave 2. That's very common to have a zigzag. And believe me, the A, B can be down here. It could be an A, B, and then off to the races. Now, with tech being stronger and having a lower high, that's why, because the price action will have to catch up. And we may not even get to the 62% retracement. We might get to the 50%, which would make sense with, guess what? We get down to these levels, we retrace back to 509, 509-ish. But if it wants to go higher, that's why this channel, I'm not sure, matters so much yet, but we'll keep it as a point of reference as we connect, as we get to retracements, as the Qs do. Then we'll keep this in mind. But this might not hold price action. Price action may go all the way up to close the gap. You know, so it's all about the references. Things change daily. Our targets don't always change, but the way it gets to the targets is what really, really messes people up because you're trading. Nothing's in a straight line. You notice price is just holding at this options expected move. That's pretty typical. Going back to this. Now, I adjusted my time references, relationships, and I cleaned everything up. So really, we have a nice important spot here at the 429. That there's also a reference on the daily time frame, which matters more than a 65. So we're really looking for something to happen on 429. That would be on Monday. And so perhaps we're at a low going into 429. I think that will be a good low, and then we'll look for that zigzag. So right now, that's kind of where I'm looking at. If we go directly up and just kind of waste time, can go up higher as well. But if we start wasting time, we have a high to 429. I think that will mark our time relationship as a high. So you see how that goes? Because this could be, if we get strong earnings tonight, this could be an A, a little consolidation, a B into a C as a zigzag. That's why trading's hard, you guys. We are short Going into the close, we'll have call protection. On the Qs, we won't use the individual names. For Tesla, I use the individual name. We only got a double on most of our calls because of the volatility. That's a whole nother conversation with the volatility crush that happens after earnings. So that's why I usually don't play earnings on individual names there. Okay, and so how do we get this projection? Well, it's pretty typical for a wave 2 down to the bottom of wave 3. So the length of wave 3, it's pretty typical to have a 618 extension down here. Now, there's another way you could do it where the length of wave 1 equals the length of wave 5, but that clearly isn't going to work out. Then we just have a higher low. That's not a wave 5. So using the other one, we have the 62% retracement or extension, which would bring us to extremes and the bottom of that channel. So I could see that happening, fooling traders, getting bears really sucked in and getting really bearish, and then just snap back to the upside. I think that's all I have it for there. We do have a time reference out in early May as well. We talked briefly about that on the daily time frame at lines up. So, I don't want to get too far ahead, but maybe that's how long it takes to get our retracement into a wave 2. And I do want to, we had a person comment and say, that's your count is wrong, and that's fine. Wave counts that's speculation. I don't count specifically to trade. I use it as a roadmap of likely situations, of possible situations. So in the run of things, we have that bullish and bearish scenario. So when we get done with this move down here, whether it's a higher low, if I move it over here, or if price gets all the way down here, this is a 1, but I have as an A as well. Because if this is an A, a large retracement to B, it's going to do the same thing. It really doesn't matter. What matters is once we get down to wave C, a larger move to the downside, how we count this just means if you're bullish or bearish, and that this ABC was just a correction and we go to new highs. Or in my main scenario is that this is a 1, 2, and then we have a wave 3, 4, 5 to the downside, and we get a retracement. So the bulls and bears are kind of looking at the same roadmap in a sense. The count's not going to really do too much to skew how I'm trading this. Okay. I think I harped on that enough. Let's go to the Qs. And I'll show you the difference at what I'm looking for the Qs. Now, let me say right away, you see this nice trend line we have moving up here? If we're bearish on all of the next tech stocks coming up, and maybe SPY gets a little bit stronger, maybe the Qs come all the way down to the trend line, make a new low, and SPY holds up. That can happen. Or maybe they both make new lows. Both of those situations, all of those situations can happen. But as of the information we have where Tesla's holding up and looking strong, perhaps Google and Meta, one's bearish and one's bullish, and kind of almost equal each other out. Anything can happen, but this is where trading comes in. You just have to protect your position. We know that we're pretty sure that this move is done, so we're playing puts, and then towards the end of the day, we're going in tomorrow, we'll have a little bit of call protection, protect our account. but we're looking at the likely situations. Okay, so now I can actually count 5 good waves into this, all right, and say this is done. If not, you see where we have confluence of a gap, support, trend line down low. Either way, we'll be in a winning situation. It's we want to just look out for the market ripping our face off. All right, so we had this breakdown from the triangle, and now we're getting a bounce. Now, the reason why I think the low is in is because of this chart. This is different. We got much higher, almost to the 50% retracement. Looks much different than this 382 from the top here. So if this is a wave 3, we retraced. Let me put the 50 on there. We retraced 50%. That's not a wave 4. All right, that it can be a wave 4 in like an ending diagonal, and I don't think that's the case. So let's eliminate this, get that out of the way. Now, so I think that we're going to make a higher low in tech. Tech's going to hold up more. SPY makes a new low, and I think this one is in, and I think this one is a zigzag. So tomorrow could be pretty bearish into the zigzag, and then going into Friday, we could have a nice sharp move to the upside with PCE data. There's catalysts all over the place this week. So what I'm expecting at this point is a retracement of this wave A. And this retracement, it's very typical. I'm going to take out all of the lines that I don't need. I'm just going to leave the 50, 60, and 80% in. I know I'm rounding. Whoops, I did it upside down. Let's turn that around from the bottom. Sorry about that. To the top there. So here's where I'm looking for the retracement. Very typical for the 62% retracement. Boom, going into tomorrow. With things being bearish, maybe the market pulls down, makes new low. SPY comes all the way down to the 78.6. All right, you just have to use what you have, the strength of the market. It could easily just be at the 50% and start. We just know that at this point, tech is going to be stronger and make a higher low. So if you're trading options, start getting to these lows, give yourself some time. Give yourself some time and some room for calls going into a couple weeks or so, just for these little moves. There's so many people that want to use Friday calls when price gets down to the 50%, but then the market keeps sinking and their Friday calls just go to anyway, I'm not telling you how to trade, just trying to give you some education on what price might do. So that's the difference right now between Qs and SPY. And ultimately, through earnings, it's very typical for example, banks sold off into earnings, but after earnings had a nice run. And that could be very typical for now. It's tech coming into tech earnings and have a little run. And then later on, when the small caps, we might be at a very low point, and the small caps have their earnings and then runs after. That's not unusual. It's more common than not. IWM, the traditional technical analysis, we have a falling wedge. I think that will break, or you can just draw it as a channel. I think this move is complete. If you notice, you have the channels, wave 2. Just so happens to be that you could draw it from the top of this move. But wave 2. This could easily be an A, B, C. But you have the top, wave 2, to the bottom, wave 3, wave 5. I know that I was just drawing it the most aesthetic way. You can do it like that as well. And that there's either room to run to the downside or you get a higher low, move to the upside. I feel like IWM will be the counterbalance of whatever happens. So if tech is stronger relatively, I do think IWM gets a new low and drags SPY down with it, perhaps DIA as well. And then complete opposite. And so that's why we look at all of the indices. So if tech really starts to tank and makes a new low, but SPY holds up, then you're probably going to see IWM break this channel and start getting into the retracement zones. Okay. And I think last but not least, we'll just, I'll show you the retracements, the Elliott wave. Here's our Elliott wave. I have this as a 1. And again, this can be an A. People argue that this is an A and then a triangle for a B. And then 1, 2, 3, 4, and an ending diagonal for 5. 1, 2, 3, 4, 5. Fits really well. That would be an A. A 1 can't have a triangle as a wave 2. So now they're going to confuse you. So now we have a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5 as a wave 1. That's what we got to deal with, you guys. So it doesn't really matter the argument there. What we're looking for is a roadmap, possible situations, retracements, and then match it up with all sorts of indicators, Bollinger Bands, DMARC, traditional technical analysis. Break out of a wedge, that means we're going up. All right. VIX, what is that going to look like? I think the VIX may have topped, kind of extended this megaphone. It just seems to be working really well. I think the VIX topped for now in the near term. And I think we'll be looking for a bounce in the VIX as SPY makes maybe a new low. I think the VIX might make a lower high. And then the VIX start to go and fill some of these gaps while SPY in the markets actually start correcting that retracement to the upside. So I do expect VIX to get a little bit perky, maybe make it up to the 18 level or so. I don't know, maybe even retest the top. We'll see. But to make a divergence from the market and then head lower. That's it. Appreciate you guys. Hope just, comment, let me know. I appreciate all of the likes. We've been building this channel, so that has gotten me to come on here daily and really start to teach and guide through a lot of this market volatility. Volatility is a friend of traders. Okay, so use it. And in the long run, if you want to see more long run items, just let me know. I might not be able to fulfill everybody's needs, but let me know what you're thinking and you might want to see. We can even think about doing individual stocks, but anyway, exactly 30 minutes. Thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you when something else happens.